please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back to the show. Well, HEG, as promised, is the stock on our radar. It posted a blockbuster set of results this quarter with a strong surge in operating profits, while the margins also saw a significant expansion. Remember, the stock has also witnessed a rise of 900% in the past year and phenomenal margins coming in. Ravi Jhunjhunwala, the chairman and MD of HEG, joins us now. Mr. Jhunjhunwala, before I ask you about your own numbers, you know, there was this whole graphite supply problem in China because of which a lot of Indian companies benefited, etc. Just tell us, what is the situation right now and how positive do the prospects look going ahead?
You see, I'd like to clarify here a very major point which lots of people are not understanding. We do produce electrodes, and China does produce graphite electrodes, but the quality and the grade that they produce is very different than where the Western world market is. So we compete with China for no more than 15 to 20% of our business, which is on the lower grade of electrodes. And for the higher grade, which is typically called ultra high power, China doesn't produce that. So whatever China does as far as graphite capacity is concerned, whether they closed 250, 300,000 tons, whether they got back 50 or 100,000 tons in the last 6 months or so, really makes very little difference to us.
So what are you saying?
We are not competing. We are not exporting to China.
But are you saying, therefore, that this $11,000 per ton is a sustainable price?
Yeah, I do believe so. I mean, I cannot talk about the numbers specifically, but I can only repeat what we just heard 2 days ago from one of the largest companies in the world from North America, where they said they answered a question when they were asked about the spot price, and that answer was the spot price is anywhere in the region of $17,000 to $23,000. But again, I'm not at all saying that this is what the average price is. But yes, we do believe that the market is very strong. There are spot prices in the region of what we heard from the Americans the other day. And if I look at our own price for the last quarter, it is surely much higher than what we just saw 2 days ago from this American company.
So what is the current price? You said it's much higher, but what is it now, your own price, and how does it compare to, say, same time last year?
No, you can't compare with last year. Last year was a very bad year. And again, coming back to the Chinese issue, the reason the graphite market has suddenly become very, very strong is that China has closed about 150 million tons of very old blast furnaces and induction furnaces, because of which their exports have practically come down by about 40–45%. 40–45% of their steel exports to 200 other countries has come down, so which has helped the other part of the world, which is the Western world, to produce more steel, which was until now being imported and dumped from China. And that is where the graphite electrode requirement has suddenly gone up, and it has gone up at a time when 20% of the electrode capacity was shut down in the last 2–3 years in America and Japan and in the rest of the world, while the two Indian companies kept increasing their market share.
Okay, what is
today there is a total imbalance because of the sudden increase.
What is your average price realization in Q4?
I can't tell you that number, but
is it 5 figures?
I can only tell you it is. It is what?
Is it 5 figures?
It is. Yeah. It is higher than the 5 figures. Yeah.
Okay. Well, Mr. Jhunjhunwala, you also have legacy contracts. Can you tell us what is your average contracting price?
You see, depending upon what you call the legacy order, where do you draw the line on the dollar per ton? But taking a rough number, which we can call a low-priced order, legacy order in the current scenario of electrodes, our last quarter we still had about 20 to 22% of sales which were done in those legacy orders.
Okay.
And going forward, this quarter and next quarter, it will be practically zero. It could be a couple of percentage here and there, but it is going to be practically zero now. So in the current quarter and the next couple of quarters, there'll be no legacy orders. So there'll be the price, average realization of our company is going to be higher than what we have seen in the last quarter.
Okay. By the way, that big deal is expected to take place any time now, and the Walmart CEO will be signing the definitive agreement with Flipkart very shortly. We will, of course, be talking at great length about this deal. But for now, all we know is that the definitive agreement will be signed very shortly. We've, of course, told you all the details over the last few days, so you know it all here on CNBC TV18. But Mr. Jhunjhunwala, you know, you spoke about a lot of demand coming in from America. I just want to understand, what's the cash that you have on your books currently, and what are your plans over the next 1 year? Do you plan to utilize that cash to increase capacity? Any expansion that you're looking at?
You see, as of now, we are a debt-free company. So we repaid all our long-term debt as well as all our working capital debt. So the cash is building up on a daily basis. So whatever is our daily profit or a weekly profit goes into the treasury. So that's the work that we have to now take care of very actively. And you see, in electrode, as we have been talking about, there is a serious scarcity of our raw material, which is hampering everybody to expand capacities. But as we speak, we have already done some debottlenecking in the last 2-3 months, and our capacity utilization in the last quarter was about 84%, whereas the whole year average was about 80%. And in the current year, we are expecting this to be in the high 80s. I would not say it would be 90, 92, but it will surely be in the high 80s, so which is going to be about 8, 9, 10% higher than current year.
Okay. Give us a ballpark idea of what revenues can be. 2,770 crores FY18. What can we expect in FY19? Likewise, 1,000 crore profit. No, actually, 1,100 crore profit. What can that be in FY19?
No, our PAT in the last quarter itself was about 900 crores plus. I'm sorry, 650 crores plus. So it is going to be much higher than that. That is all I can say, because, as you rightly said, the legacy orders are all gone. So everything that we are now going to sell in the next 12 months is going to be at new prices, and spot prices. We just spoke about whatever we heard from the market. The spot prices are obviously much higher than our average price of last quarter or the previous year.
Okay. All right, Mr. Jhunjhunwala, all the best for the quarters to come. Of course, you've been doing a great job up until now. Hope that continues. Thanks so much for joining us. HEG was the stock we were talking about, up 2.5%. But let's quickly get a lowdown on what's happening in crude, because you know, it has been surging now, almost $77 a barrel. Manisha Gupta joins in with a roundup of all of that. Manisha?
Well, absolutely. There is more and more strength coming in for the crude oil prices. All the profit taking that we saw yesterday has been bought into in those dips. And we are standing at nearly 2.5% gains in the global markets, almost 3% up in the Indian crude oil prices, as well as how we have open trade here. Well, it's not just the Iran Accord. Well, that is, of course, the major thing. But then apart from that, the markets have been seeing premium build up because of the Venezuela concerns, where you have seen the output cut down by half in last 5 or 6 years. And it also has to do with the OPEC compliance, strong global demand. Markets also are looking at the global inventories just about at 5-year average. So all of those factors have been very supportive as well. And there is not too much of a spare capacity when it comes to crude in the global markets. Excuse me. So any event or any random number that you will see an impact coming in for the crude oil prices. And that's exactly what we are seeing right now. Well, it is the US dollar trading at a 4-month highs, and that has been pulling the gold and silver prices on the lower side. So while the international gold and silver prices are trading in the negative, it has been, excuse me, it has been about the rupee depreciation that has led to the Indian prices trading on the positive note. So 2/10 to nearly 3/10% of gains is what we have seen the Indian markets open trade as. The strength in US dollar has been pulling the base metal prices lower as well, but it really has been the Chinese data which has been on the stronger side, and that is the reason you have seen a green come across there. Aluminum prices now have gained nearly 4% in last 3 trading sessions itself. Copper, of course, has been gaining. We have seen very strong Chinese demand number come in for that, and with the steel prices in Shanghai holding around those 8-week highs, it has been good going for all of those steel ingredients as well. So positive opening there as well. Trading strategies is what we have from Nirmal Bang today, and they have a strategy on gold and copper for the markets today. In case of gold prices, they continue with their sell strategies. 31,100 is what they're looking at for that one. In case of copper prices, though, they expect the market to see some buying there. 450 rather on the lower side is what they're expecting as a level to come in for copper as well.
Well, markets just flat at this point in time, but that little bit of green bias that we saw in the Sensex and the Nifty has given way to a little bit of red. So basically very, very ranged market at this point in time, with the Bank Nifty taking it a little bit more in the red. Let's shift to earnings again. Whirlpool reported largely an inline set of numbers. Fourth quarter earnings were strong. Top line growth in terms of numbers were good, but margins were the ones that disappointed. Sunil D'Souza, Managing Director of Whirlpool, joins in. Good morning, Mr. D'Souza. Well, if you can take us through how the revenues have done in the current quarter. We are already 1.5 months into this quarter. Are they better than the demand in the last quarter?
Okay, before I come to this quarter itself, I'd just like to highlight that Whirlpool India, we've gone from strength to strength. If you take the last 3 financial years, we've grown top line by 5%, 14% and 24% in sequence. The good news is even the March quarter came in at 24%. So very strong top line growth, 1,257 crores. Bottom line PAT, we delivered 91 crores, which is at 23%, and therefore an increase in EPS of 23%. The good news is for the full year of 2018, which ended in March, overall our top line is now close to 5,000 crores, and we've delivered a decent bottom line of 351 crores PAT, which is again a 13% growth versus the previous year. And this was done despite all the turbulence in the economy of cycling the post-demonetization, the GST changes, and then a bit of commodity inflation that we saw. The thing is, middle of last year onwards, we had seen commodities start to climb and start to about plateau at the end of the year and opening of this year. So we managed to cycle that very well in quarter 1. But as we sit in the middle of quarter 2, I think just before this program, you had this discussion about 2 big swings, and those impact our business and our industry as a whole. Number 1, I think oil has gone from about $60 the same time last year to right now it's about touching about 77. Sure. Oil has a direct impact on us in terms of raw material, as well as indirect impact in terms of freight costs, etc. Because we're a freight heavy industry.
So margins will fall further,
Mr.
D'Souza.
Currency.
Yeah. So do you are you saying that all this means margins will fall further?
All that I would say is costs will rise further. And as cost rises further, this is a very competitive industry, but it's also a very rational industry. As we've seen the costs come in, it starts impacting all the players. I don't think anyone is immune to that. And therefore, you will start seeing this in prices starting to move up. As we had said during the GST period also, when the tax incidence went up, ultimately the industry moved up. So the cost pressures are mounting both in terms of oil as well as currency, because quite a few of the input components are imported, and therefore the rupee depreciation impacts us a lot. So I would expect to see that as this prices start to impact the input, you would start to see industry starting to move pricing up.
So
we
will it be
in line with the industry as and when it moves.
Mr. Sunil, will it be a conscious decision by the company then to sort of gain market share at the cost of margins?
I do not think Whirlpool is in the business of pricing and growing volume, and we've always maintained that. Even if you take the full financial year last year, overall we've just about maintained the operating margins. The PAT is a bit down because of the extra incidence of tax, which is up by about 1.5%. Right now we are at about a 35% tax incidence, but overall bottom line margin is about the same. And the team has managed that by tackling commodity and currency volatility through strong cost measures, number one. Number two, making sure that our product portfolio is filling in gaps to increase value, number two. And number three is the sales team going out into geographic expansion. So while the industry is soft, I think we've outpaced industry, but not by pricing itself, by making sure the execution on the ground is better than everyone else, both in terms of the portfolio and geographic reach.
Okay.
So we are hitting more billing points. We've expanded both our mass and premium portfolio, and I think that is what is giving us the growth.
Mr. D'Souza, we're completely out of time. Thank you very much for joining us with those details. Well, we leave the markets in pretty much flat terrain, but I think some more weakness has begun to catch on into the mid-cap space, and now the advanced declines are almost 1:1. So